I bet you heard that term support, resistance, a lot. Is it important? Damn right it is. Very important. In this part 2, price action and technical analysis crash course, we're gonna be going over support and resistance in depth, how we can read it on charts, and how can we identify our levels. If you haven't watched the previous part, click on the link here. You'll find it, go watch it, and then watch this one. They're actually in a series, but if you're advanced a little bit, you can keep going on this one. It's up to you. Let's dive right into it. Hey my friend, Zach here, and welcome to the World of Investing, a channel to help you learn and get better at trading and investing. After that, we have learned a little bit about price action and how does it work, and reading the candlesticks and reading the psychology behind it. These candles starts printing one after the other, and then at the end they start forming support and resistance. A quick explanation of support. Support is actually a level where the prices would actually go down and touch that level and bounce off of it multiple times. In other ways, you can actually imagine it, it's like a ball, and the support is actually, the ball is the price and the support is actually the ground. The ball will actually bounce off the ground and go up, off the ground and go up, off the ground and go up. That's a support level. On the other hand, resistance is actually the level, the price level, where the prices would go actually up. It would touch that, and you think of it as a ceiling. It would touch that and it go down, touch that and it would actually go down, go up, get there, touch the level and go down. Also imagine it as in the ball, it's in a room. The floor is actually support and the ceiling is actually resistance. So let's say that ball actually broke through. Finally, it broke through a resistance area. That resistance area, it tends to become a support area where the ball broke through and then bounces back off the second level, which that becomes the ground of the second level. And there's another resistance point up there. So when I say support, remember, it's when the price is going down, it's actually bouncing off of it. When I say resistance, remember when the price is going up and it's rejecting from that level. So the same goes on if the price actually breaks through the ground, that ground becomes resistance. The ball will actually bounce off of underground support, and then the lower level support, it starts rejecting off of that resistance. So we're gonna move to the charts and get them explained on the charts. But before we do that, I just want you to have it clear. Support and resistance are actually areas. They're not precise price. Never fall into that. A lot of traders actually do. I'll talk about it later in this video. We're gonna touch on that, but I just want you to have that in mind. Think of it that the ground floor is a thick floor. It's not a small, thin one. It's a thick, it's an area. And the ceiling is the same. It's a thick, it's an area. So now we're at the charts, and let's start with the horizontal support areas. I'm gonna take Ford as the first example. We're looking at the chart right now. Remember when we said the price goes down and it finds an area that it bounces off? That's the first area. And it goes up. The bears actually manage to resist that area, and it pulls it back down. And it bounces off the same area. It goes up, it bounces off of the same area. It goes up, bounces off the same area. So that what we call a horizontal support line. Look at this. So you see that area? That is a support area. Again, that is a support area. So it touched over 2, and the third time it becomes a solid support area. The fourth time, it's even better. The fifth time, it's even better. The sixth time, it's even better. And guess what? One more here. And one more here. And at the end, remember when we said that's the actual floor? When the ball bounces and actually breaks through that floor becomes a ceiling. So it became actually a resistance area. So this area, 1, 2, 3, 4, they're all resistance area. See how simple and clean that is. And guess what? There's another one. It's sitting right here. 1 point, 2 point, 3 point, and previously it was what? It was resistance. It resisted here, right here, right here, right here, and then now became support. So that was the ceiling. When it broke off of it, okay, at one point it came back and it made it the floor. You see how support and resistance in a horizontal line. That's an easy, simple way. Now, there's one thing you have to know about this, especially if you're a new trader or if you're struggling. Only choose areas that are clean and clear. You don't have to go messy about it. Don't mess the whole chart just because you found 2 points that matches. So don't just keep going, oh, here's an area. Okay, it has a few points, so it has one here, and then another one. Here's an area, and then here's an area, here's an area, and here's an area, and here's an area, and here's an area, and then you start messing up your chart. Just go for the clean, obvious areas, and that's very important. You have to keep your charts clean when you identify some areas. Another thing what I do when I'm on the weekly, okay, I change colors. So when I'm on the weekly, I make it a purple one. So whenever I'm on the 30-minute or 15-minute chart or 3-minute chart, the purple one, I would know that is a significant level on a weekly chart. And on the daily chart, I make it red, for example, right? So when I go to the daily chart, I identify, for example, this level on a daily chart. Okay, I just make it red. There you go. So now when I'm trying to trade during the day and when I'm trying, you see, I see this is a weekly level. So I know how significant that can be. Okay, there you go. 15 minutes, it shows that's my daily level, and that's a significant level as well. Now, if I want to draw levels within the half an hour and 3 minutes, I keep them white so it does not take a lot of my time when I'm drawing. So that's an example about the horizontal support and horizontal resistance. You see how clean it is? So the second kind, we have an uptrend support and uptrend resistance. Let's start with the uptrend support. So now we're on SPY. Let's see how significant those levels are. So we're on a daily chart. Here's an example of a trending upward support. Let's see if we have a cleaner one on a weekly. Yes, we do. Okay, so when we have where the bulls actually held their ground at one point over here, the prices went up, it got rejected, but it bounced back on a higher level of that low. It did not go all the way down. That means it's a bullish sign and the trend is upwards, okay? And the bulls are holding their ground even before it gets to the previous level. That happens the same way. This is higher, and then it goes, they push back up. When it pulls back, it holds higher low. We call it higher lows. See that one low, that's the second low. That is the third low, and that is the fourth low. So it makes a trend line. So how do we go by that? We actually draw a line and connect the areas, not the dots. It's not exact dot, it's an area. So we go upwards like this. You see how clean that is? And when we talk about resistance, there's an upward resistance. Let's see where we can find upward resistance. You see this? And we put it on the most times it touched that area. Okay, so that's an area. That's an area, that's an area, okay? That's an upward resistance where the psychology behind it, it's a bullish sign as well, because the bears could not hold the same area. So it went a little bit above it, but they managed to pull back. And they went a little bit above it and they managed to pull back. So the bulls are always breaking their wall bit by bit. It's an obvious one here, there's an obvious one here, for example. And for me, on my charts, I only use the obvious ones. I don't care. I would never make my charts that messy. Look at this. So once, twice, 3, 4 as a support. As a resistance, once, twice, 3, 4, 5. Let's see if AMD we have. On AMD here, we have a good, nice example of a trending up support. One point, actually, I think we have more. So anyway, you can go like this, but it's okay. 1 point, 2 points, 3 points, 4 points. Eventually, every area is going to get broken sometime, someday, and that's how we plan our trades. That same trend line, it became a resistance. So it rejected. It was support here. So it held the price here. 1, 2, 3, 4, 5. Now look, it rejected here. It went a little bit above it, but it ended up rejecting. It rejected here, and it didn't fully reach that area, and it rejected right here. And it rejected actually one more right here. That's another rejection. You see that? So that's an upward support that turned into a resistance. Here's another example. Upward support, it's an obvious area. It touched once, twice, 3, 4 times. All this is a nice support area. It's easy to spot, guys. Don't overdo it. So just to clarify, the upward support area and the upward resistance area, they're more of a bullish sign that the trend is going up. The bulls are actually holding higher lows. They're actually able to push higher highs. So that's a high right here, and that's a high right here. And the bulls are managing to push it and make it a higher high, and that's a higher high. It's a bullish sign. Now we have the other one, which is the trending down support and trending down resistance. Let's take this for example. That's a nice example. So trending down support, it's a bearish signal, and it's showing that the bulls cannot hold their levels. Their levels just keep breaking and then pushing back up. So look here, it went all the way down, it held this level, it pushed back up. Instead of holding the same level, it actually broke their wall and it held a lower low. So it starts making lower lows, and it starts making a lower low. So how many lows do we have here? 1, 2, 3, and 4. That's a trending down support. Let's see if we have a trending down resistance area. Look at this. And that's a trending down resistance area. How many times did it reject off of this area? I want you to count with me. Once, twice, and those are the obvious areas. 3, 4. The psychology behind it, the bears are dominating and the bulls cannot actually push it back to the resistance walls. The bears are actually pushing it lower, and what you're making here is lower highs. That's a trending down. It's simple concept. I believe every one of you understood, and if you did not, please ask in the description. There's nothing called a dumb question. It doesn't matter how simple it is. Ask. If you don't ask, you will never learn. On the same chart, we have the horizontal support. 1, 2, 3, 4, 5. We have the horizontal resistance, and actually became support. So that's resistance, 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 and that's support, support, support. Okay. We have the trending down support, and we have the trending down resistance. Now, is there more support and resistance than that? Yes, there is. There is indicators, there is moving averages, but I use those indicators as a backup that supports the levels that we have on the chart that I previously drew. I never use them as my main support and resistance areas. They're not significant, and I'm not going to go through them until I get to indicators episode. Remember, only use the simple, obvious levels on your chart. After we went through all those examples, the horizontal support, horizontal resistance, the trending up support, trending up resistance, trending down support, trending down resistance, you might have a big question, and that's an important question. What makes a resistance or support level a very strong resistance or support level? There are 4 factors that makes them strong. The first one is the volume. So at the candle that actually rejected off of that level, you check the volume. If the volume is a high volume, it strengthens the actual resistance or support area. The second one, the higher the time frame, the stronger that resistance is. So if you're looking at the weekly chart, it's stronger. That area, if it curves back or bounces back on a weekly chart, it's a stronger area than on an hourly chart or a daily chart, or even less. The third one is the more times it touches that area, the stronger it gets. So if it touches twice, okay. The third time and it rejects, it's even stronger. The fourth, it's even stronger. And the fourth part is when a trending support or resistance intersects with a horizontal level of support or resistance, that becomes a key point area as well. So all those 4 makes it a stronger support or resistance area. As I mentioned before, support and resistance areas are areas, not fixed levels. They are not. And I'm not gonna go in depth in that, but people that actually think it's a fixed price, they fall into 2 things. The first one, they miss a lot of entries a lot of time. They have a fixed price for it, and they say, okay, we're a couple of pennies, I'm gonna be bidding a couple of pennies before that price, or we're gonna sell a couple of pennies below that exact price. That's when they actually fall into missing a lot of trades or missing a lot of exits that they were supposed to exit. And the second one is they get shaken out of trades a lot. So it hits their stop loss because their stop loss is too tight. Now, later on, I'm gonna make a lot of videos about where to put their stop loss, when to make them a little bit tighter, and when to give them actually more wiggle room. But that's for a different topic. I just wanted to touch on those. My friends, that concludes the video. Our next episode is gonna be about chart patterns, and it's gonna be a long video. I use it a lot in my day trading or my swing trading, and I'm gonna be explaining the psychology behind them. Click on this video to watch it. It's very important. If it's not there, subscribe. You'll see it next week. See you soon.